Good evening, VV Nation, and welcome to the channel. My name is Glenn Tompkins, Senior Stock Market Strategist for VectorVest, and I'm glad you're here because this video came specifically from you guys. I did a video a week ago on the YieldMax ETFs, and it looked great. And a lot of people were turned on by it, turned on to it, and typed wows because I asked you if this was a wow situation, let me know. A lot of wows, but a lot of great questions that came out as well, which prompted this video. I needed to clear up some things. And at the end, I am going to give you the case of, are these too good to be true or not? All right, let's get right into the program. And I'm going to start off with the YieldMax. I went to the ETF website, YieldMaxETFs.com. YieldMaxETFs.com. And it's going to break down all of the ETFs that they have. I've got a watch list of 32. I'm definitely thinking that more will show up. I am going to add them to my watch list. Now, I'm going to tell you that most likely we will not create an ETF watch list on these yield maxes because they're really not VectorVest generated type of scenarios. But I'm going to try to show you some ways of how you can use the VectorVest system to get into the best yield maxes. Now understand, the yield maxes are an income-based vehicle to make money, passive income. But there's a lot of questions that come out of it. You know, someone said that this was misleading. I didn't write down the whole comment, but said it was misleading. You know me, I've got I try to have a lot of integrity in regards to what I do on here, why I wanted to answer those questions. Questions about, this income strategy can yield about 3% a month. Be careful with yield maxes because they're notorious for NAV erosion, net asset value erosion. And that is something that I didn't touch enough upon in the first video. Net asset value erosion. As these vehicles go up and down in price will determine the amount of money, the amount of income that will be paid. If these vehicles are going down, it's going to lower the income being paid per share. If they're going up in value, then the amount of money that will be dispersed on a monthly basis will go up in value. So I did say that it wasn't about the price movement on these, and it really isn't. It is all about the money that you receive as far as passive income. But wait, there comes a point of diminishing return if the stock or these ETFs are going down in value, even though you're getting paid monthly, and it can vary from month to month based on what these ETFs are doing. When does it get to a point that the income being paid out is worth the price depreciation? And that's a real question. So I didn't take that into account, but I will later in this presentation. I definitely will, and you're going to see what I mean by that. Somebody put that these are a yield trap. What you make in income, you will lose in stock price. All these yield ETFs are very volatile. Where does the volatility come into play? Well, the volatility comes into play depending on what's going on with the yield max, what's going on with interest rates, which could affect how much money is being paid out. And again, if the ETF is going down, the value of the money being paid out will go down as well. So going back to these are year trap, what you make in income. So again, a point of diminishing returns. If the ETF continues to go down, you still need to have stops in place. Another side of that is play the yield maxes that you feel comfortable with the stock going up in price. Now remember, the yield max pays the income, not the underlying company. So as you see at the top, Palantir, PLTY is a yield max ETF. Palantir pays no money to you if you own this. Palantir, if it's got a dividend, pays a dividend to the people who own the stock. But if you don't own the stock, you don't get the dividend. PLTY is a YieldMax product that on a monthly basis pays you income for owning it. But if it's going down, you got price depreciation. Even though you've got income coming in, if the price depreciation outweighs the income coming in, it may not be worth it to own it. After researching many of these ETFs, they all seem to have the same track record. Price depreciation with a dividend payout, hopefully, that outpaces the depreciation. These are fairly new, so history past the past 1 year chart isn't available. The questions I have immediately here are, will the investment capital erode before the dividend payout? In some cases, it will. When and if the dividend payment equal to the capital investment, will the ETF exist to continue a payout? Now, from what I understand, until the ETF, if it ever goes out of business, and I haven't seen that happen yet, they're still relatively new, will continue to pay the dividend or the income payment. But the lower it goes in price on the ETF, the lower, you know something, how do I explain this? Let's talk about that. Let's get to the website for this. All right, and like NVDY. All right, NVDY, and this is at the, what is this again? It is at the www.YieldMaxETFs.com. YieldMaxETFs.com. Now, NVIDIA. Now, notice the distribution per share. All right, January, 88 cents, 89 cents. But when NVIDIA was doing okay, 12.6 it paid out, $1.18. In November, $1.02. In October, $1.09. In September, $1.35, so on. So they will vary. They will vary based upon what the ETF is doing. But notice, it still pays a distribution out on a monthly basis. But if the price is going down, 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 is this disbursement worth you owning it? And again, we will cover that in a second. Let's go back to the program. As we go back, I want to show you a couple of things. What would I look for in regards to buying these? I got another question here. I have heard that you should pair trade them. I'm going to set up a watch list where you can pair trades because some of these are short. Once I've got all of them in where I can pair trade, I'm going to look at that, and that'll be a video for another time. You can always play either side, and you're still going to be getting paid the income. Why not play the YieldMax for the right side of the ETF and still make money monthly no matter what the stock does? That would be very interesting. So I'm going to do that. Are these eligible for dividend reinvestments? And the answer is yes, they are, depending on your broker. These are available. You can put these back as dividend reinvestments. How long do you have to keep the shares to start getting the dividends? Just like on any other dividend, you've got to be in before the X date. After the X date, you are the record, a holder of record, and you will get paid that dividend. I like to call these income, just income distributions. All right, so from a VectorVest perspective, on the 32 that I have, what things would I look for? Well, one, I got to make sure that I'm comfortable with the underlying going up. All right, Palantir, JP Morgan, Netflix, I like Facebook, Google, BIGI, the Target 12, Big 50. All right, I'm looking at these by VST. I would look at the ones that have a VST above 1, number one. Number two, let's find out which ones of these are going up in price. Go look at that momentum, RT, sort by RT. A lot of the same ones are at the top of the list. The next big thing, how liquid are these? Let's sort these by average volume and concentrate on the ones that have 100,000 or more shares average volume. Now I know I've got liquidity on these, all right? But again, before you buy them, even though they've got liquidity, make sure, how do you feel about the underlying? Now remember, the underlying doesn't pay anything, but if the underlying is going up, the YieldMax should be going up. That way you're going to get capital appreciation along with the investment payment, the income investment payment. That's another way of looking at it. And that was a great question, to make sure that these had liquidity. I'd make sure that I concentrate on all the ones that had at least 100,000 of average volume. Notice that Apple is not in there. Gold miners, Microsoft, they're not at 100,000. But as time goes along, once they get into the range of 100,000, I'd look at them a little bit more closer. But the ones, there's a lot of them out of the 32 that have an average volume that tells me that they are liquid. And another one, why not look at CI to see which stocks or which yield maxes go up more than they go down? Palantir meets that as well. All right, so it's in an uptrend, high VST, high CI. I like all of that when it comes down to PLTY, of which I own along with the Palantir stock. All right, so I wanted to clear up a couple of few things. Hopefully that did that. Anybody who thought that this was misleading, and I hope you don't think it's misleading. I think a little deeper dive into answering those questions, especially the NAV, the net asset value question, and the erosion. I'm gonna talk about that right now. Let's go to the portfolios. Here's my YieldMax portfolio right now. These are the ones I picked out personally because I wanted a little bit more diversity in the picks. They're still all tech, but I got AI, I got Bitcoin, Netflix, Palantir, NVIDIA. They're still mainly all techs, but it's up 0.25%. It's up 0.25% because I've added the payments, the dividend payments. I'm going to go to manage portfolio. Nope, actually, we're going to go to reports, go to transaction log. I have now added on some of these, based upon the date, the income invested, the dividend coming back out for us based upon how many shares we have. On 117, dividend for AIYY, $962. Dividend for FBY, $802. $645 for TSM. Google, $434. Apple, $347. Tesla, $1,054. And these are just one-time payments. I want to show you something else. So that's what the dividends added to it. I'm going to go back in time. We did this last Friday, right? I'm going to do a quick test. I'm going to take the beginning date back to last week. I'm going to run the test. Without the dividends added, we're down 2%. With the dividends added, we're up 0.25%. So yes, I totally understand about the net asset value going down or the erosion. But I wanted to pay attention to the power of the dividends that are being paid out. We've got 4 winners, 6 losses. Out of these, we got only 4. We've only got 4 that made money, 6 that lost money. That's straight up without the dividend payments. With the dividend payments, we've got 1, 2, 3, 4, 5 losers and 5 winners. But again, that includes the dividend payments. When I showed you before, I didn't show you the dividend payments. Now in this portfolio, and we're going to continue this portfolio throughout the year, I want to see the difference between the price appreciation or depreciation compared to the money paid out. Down 2%, just holding them, but with the addition of the dividend payments, we're up. We're going to see how that plays itself out throughout the year. And then we get a better feel. We then get a better feel of the erosion. Does it affect this super duperly bad or not? And we're going to get to that by the end of the year. Folks, I hope I've answered some of the questions that you had out there. I'm sure I didn't answer all of them. But if I was able to answer some of the questions that were on your mind, type in the comments, answered. That tells me that, I did a better job of representing the YieldMax ETFs. And I thought I listen. I want to make sure that I present a topic that you like, that looks good, but I'm not going to shirk away from the idea of, are these too good to be true? I don't think that they're too good to be true. I think they're a great way of adding income to your portfolio. Two things I want you to look for. I want you to make sure that you're looking at playing the yield maxes on stocks you like. Get that capital appreciation on the yield max as well as the dividend payment. And number two, use some semblance of looking at the VectorVest software to put you in the best yield maxes to give you that capital appreciation. If we go along with getting capital appreciation, then the NAV doesn't affect us nearly as much, right? Because we're getting good capital appreciation. But I'm going to give you a third thing. If the yield max falls and it falls below a stop price that you have, get out of it. Because then at that point, I don't think that the dividend payment is worth the price decline. Hopefully, again, that clears up a lot of stuff for you. Folks, if you're brand new to the channel, first time watching, you like this kind of content, make sure you hit the subscribe button. Number two, if you like what you saw today and it was a better representation of last week, make sure you hit the like button and share. Like and share, like and share.